Hello traders. Well, what a crazy start to trading for December in the last couple of days. Look, all the market focus has been on Bitcoin and the crypto volatility that we've seen. It all kicked off Monday morning. Monday morning, Bitcoin just started selling off. It was one-way traffic and it went down very fast, and at one stage was off as much as 7%. A lot of the market was sitting there scratching their heads going, what just happened? Why? There was no headlines, there was no real warnings of what was about to happen. But look, Monday mornings in Asia are notoriously for being one of the worst times globally for trading liquidity. So a little bit of Bitcoin selling. Obviously, a lot of players are very levered up in Bitcoin and crypto. Sees some forced liquidation, which makes some more forced selling and a domino type effect. In any case, the sentiment and the market was doom and gloom around what was going on Monday. There was a lot of attention on Michael Saylor and his company Strategy, which is pretty much just a Bitcoin vehicle. They own 650,000 Bitcoin. Market started to question as well as whether or not Michael Saylor and Strategy might have to sell at some stage and maybe be some more forced selling. And if that did occur, obviously it would trigger a big risk event. So yes, Monday, Bitcoin, it took risk just across the board lower with it. And yes, first day of December, a lot of doom and gloom. But come Tuesday morning, first thing in the morning from the open, Bitcoin started going up and never stopped going up. Had an enormous rally yesterday, and we actually went up 7%. So we retook all the losses from the previous day, and Bitcoin actually traded higher than where it sold off from on Monday. So we went as high as 92,000+. And technically, look, it does look a little bit more constructive. Potentially there is a double bottom now in Bitcoin, neckline around about that 92,500, 93,000. So if we do break that, potentially, those targets are back up towards 100,000. So it's quite crazy saying this now after what happened on Monday, but here we are. But in any case, look, a lot of the players, I'd imagine, have been burnt in the last 24 hours. So look, I don't expect a rally up to 100,000 in a straight line in the short term. Anyway, moving along. One of the things that the market is focused on and is worth talking about is what's happening in Japan. There is a lot of noise coming from the BOJ that they are ready to hike rates again. It's a big deal when they hike rates because it happens very, very rarely. They are the only central bank globally that is hiking while the rest have all been easing. So that in itself is also a big deal. Now, the next BOJ meeting is on December the 19th, and the market's pricing in pretty much an 80% chance that they will be hiking the policy rate. So from 0.5% up to 0.75%. Japanese bond yields have been on a mission. They have been spiking a lot higher. This has been going on for a little while, but recently we've now seen Japanese 2-year yields hit 1%, 18-year high. 10-year JGB yields, they are now trading around about 1.9%, almost pushing up to 2%. Again, last seen like 18 years ago. Now, one of the things that has been happening in the last few years that we've risked that it's rallied so aggressively is what is called the carry trade. Is that the market has been feasting on low Japanese rates, lending from Japan pretty much at zero, taking that money out and then reinvesting it into US tech stocks, Nvidia, etc. Driving risk a lot higher to those record highs, US treasuries, etc. But now with what's going on with Japanese bond yields, the fact that they are spiking, the maths on the carry trade does not add up anymore. So there is a lot of angst in the market that we may see a carry trade unwind part 2. when we first had a carry trade unwind a couple of years ago, had a similar setup, had a Fed that cut rates, BOJ that raised rates pretty soon after. We got a Fed meeting on the 10th of December coming up, and then 1 week later the BOJ. So potentially, there is something just before Christmas that the market really needs to navigate, and that you really need to also be careful about. That potentially we could see, risk get hit, and a carry trade unwind. So you've got to be watching dollar yen as well. At the moment, dollar yen's behaving itself. It is at elevated levels, but when the carry trade unwind happens, dollar yen does get hit very hard and violently. Last time it came off a good 1,000 points. Anyway, something to keep in mind. Besides crypto, Bitcoin volatility, we've also had volatility in precious metals. Look, they've been charging, obviously. But yesterday, yes, silver did make a new record high around that 58.50 plus area, but it did retrace a good $2 at one stage. And also had gold retrace at one stage a good $70 from its daily high yesterday, before we saw the buyers kick in, and the precious metals closed back a lot higher. So look, you need to be careful, even though, yes, everyone is trying to get long and play from the long side with precious metals. They can have some decent volatility, shake out some of the weaker hands. So certainly you need to, time your levels correctly, and also size your positions correctly, because they are volatile. Now today there is some economic data. In Oz we got third quarter GDP. Market's expecting around about 0.7 for the third quarter. Aussie hasn't been really doing too much, just been sitting around just below 66 cents. So potentially we might see a bit of a move in the Aussie, depending on whether or not that data comes out above or below expectations. ADP employment in the US tonight. It looks like that's going to come in for November, a pretty low figure, just 5,000 new jobs. So look, I mean, the rate cut next week is pretty much cemented, so I'm not sure really it's going to move the dial too much. Anyway, good luck with your trades, and we'll check back in with you shortly.